Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
We have a couple of red folder events today. We had one some in Europe earlier this morning, 3:15, 3:30. That's already behind us. And for the rest of the day, it looks like it's going to be pretty calm and pretty quiet. On the FX workbook news screen, April 23rd. More. We have let's see, pretty much same thing. Europe. The euro has some events earlier this morning, and looks like British pound had something earlier. But everything else for the rest of the day seems to be pretty clear up until we get to about 10:30. We have some U.S. news and some Euro news around 10:30 this morning. So that's about 2.5 hours away. And we may be all done for the week by that time. So, but anyway, that's what we have for the news. Let's go to the charts. Maybe a little slow going today. Like I said, it's Friday, and usually Fridays, I'm finding out that taking trades on Fridays doesn't always serve me well. And I've done pretty well for the week so far. So we're going to, this is a demo platform. So anything I take today is going to be in a demo mode. Again, this is for educational purposes only. We're not, and you can take live trades if you want, but when I'm doing these sessions, I usually like just showing it so that way I don't have to worry about losing track of a trade while I'm talking and trying to explain something. Generally, when I'm trading live, I usually like to be able to really focus on what I'm doing and not have a lot of distractors in the process. So just keep that in mind for today. Even though sometimes I do take trades on another account besides here, but this is, like I said, this one's for educational purposes. And let's see where we at here. I was actually playing around with the German 30 yesterday afternoon, and it had a lot of volatility, and you can really get your clock cleaned out with that if these indexes, they do become very volatile. They are a normal position I would take on a Forex pair is a whole lot less than what I would take on like the indexes because of when the volatility and the pip count volume is you have to be really careful that you don't overtrade your account with that. So with that, right now there's nothing going. There is a little arrow right here. I want a 30-minute chart. Let me just see here. I was playing around with the Fibonacci's a little bit yesterday afternoon. That's why this is still here. Let me take this. You can see right now from the high to the low of this range. Yes, this was yesterday's range right in here. And you can see that from the overnight, it's just playing right around inside the middle of this whole range. It's basically ranging between like the 23% and the 76% retracement. And it's just been going sideways in between. Not a lot of volatility. Here's an arrow to the downside. Just move this up here, and we'll just take this look at this at a different time frame. Here's the target. Let me take this Fibonacci off of here. Object list. Fibonacci, we're going to delete that. And we're going to take this down to the time frames we usually trade the indexes on. That's on a 5-minute. And you can see it's still very, very tight, not really going anywhere. And there's another little level right here between where the other level was on the 30-minute chart. So if you were to take this, you'd be coming right into this, and you would probably only be getting, this is about $7 move, and without a lot of push to either side of the nut. So again, you want to stay away from stuff like that. Let me just take all this stuff off, and we'll just start from some fresh screens here. These are yesterday's charts. And let's see, come take a look at Let's see. I see nothing on the 15-minute chart on that. Let's take a look at the heat map while we're waiting for something to really pop up here.
I just had an US, actually.
What was that?
I had an Aussie US just pop up on I don't run the dashboard yet.
Okay.
So up on the old one, yeah.
I'll tell you, let's take a look at that real quick since you called that one out. And 15-minute, was it maybe?
Yes, 15-minute.
Yeah, mine's not showing it yet. Okay.
No, you've got the euro.
Oh, well, that would make a difference. Aussie, US, Aussie. Yeah. There we go. Let's do it on the. Let's just take a look at it on 5 minutes since we have an arrow on that. Okay, so we have basically we don't have a bounce off the. We have some arrows here. If this down arrow, if it had a bounce off this, that would be a bounce arrow. There's no go. It's right here at the red zone. Not enough room to take anything. We're in the zone already. We're already in a somewhat of a downward trend on the top. We have upper trend on the bottom. It's just consolidating between here's a high, here's a low, lower high, higher low, lower high, higher low, and now we have a range outside of this little area. So it's starting to make some whipsaw moves. Nothing to really take a trade of, nothing to really hang our hat on. So we'll just pass on that. And let's see, let's go over to the heat map. We'll see what currencies are strong, which ones are weak. And we're looking at the euro, British pound. Looks like the British is strong, British. So basically the British pound is strong. It's the second strongest. It's in the top two of the pairs. So we'd be looking at British pound pairs trading against the US dollar. The dollar is the weakest, and the Canadian dollar is the second weakest. So let's look at, we'll start looking at British pound versus Canadian dollar, US dollar. Maybe throw a Swiss in there and see if there's anything that we can look at with that. So we're going to look at the British pairs while we're hunting right now. British CAD be right here. And we did have a bounce arrow go. It looks like it's moving to the upside. Now the arrow was way several hours ago. Remember, I think we had some British news around 10 o'clock. Let's see, where was that? It was around 10 o'clock we had. That was Euro and US, that's what it was, okay. So on this one, 15-minute chart, we have a arrow. Now we can see it's already pretty much out of the chute. That doesn't mean it doesn't have more room to the upside. This was, said lots of room here. That's 106 pips to the upside on this chart. And we had a nice little bounce, came back in, made another little trend, another little zone. And let's take a look at the higher time frame. Actually, first let me get my moving averages up here. Template load. And we have this, our 200 moving average is pointing down. We have the crossover of all the other three. So right now, if I were to be taking this thing long, I would be looking at this being my target zone right in here. That's a significant level of between your target zone. You are having some downward pressure. Now let's see about whether or not we have more red zones than green zones, and we have more green zones right now on the upside. Here's the target. We'll mark that. And scroll back. Actually, I kind of like this, except for the fact it's already past the arrow entry point. We've had to have taken, this one would have been at, that was probably about 3 o'clock, 3 o'clock this morning. That was right soon after the London Open. Here's our money zone right in here. This looks like this is kind of a money zone breakout as I look at this. It's one of the strategies is that we have the day break. We look at, see on a 15-minute chart, you look and see where the highest candle body is before the money zone, where the lowest candle body is before the money zone is right here. And then the first candle that breaks the money zone, you get into the trade, go for your 20 pips or your target. And I just got a cup of coffee, just came in the door.
Lucky you.
Thank you.
Send Mark here, will you?
Yeah.
Please.
So anyway, this would have been the overnight range. Here's the money zone. Breaks out. And you look for 20 pips or to your next target. You can take this thing, and would have had the 20 pips. Now you have had that 20 pips within, about within about an hour and a half. You've had your 20 pips. This is still the ultimate target for it. 40 pips would have been your stop. That didn't come anywhere close to hitting that. So now the question is, what do we do about this? And so I said I would be putting this, I would expect a bounce here. I would check the distance between here and where the price is right now. You still have 30 pips. And we have an upward trend. Actually, if it wasn't for Friday, if it wasn't for knowing that whatever you get into, I don't like holding trades over the weekend if I can avoid it. I will with the expert advisors, but I usually don't do it with my manual trades. I try to be out before the weekend. This is pretty much where it broke out. Here's the bottom trend line. You can see this is right here is where everything consolidated right at this point, right where this arrow came in. So that's kind of a nice little spot where it took off. The entry would have been right at this, the close of this candle right here at the top. Right now it's pulling back to the entry line, and it's in an uptrend. So you could possibly, if you wanted to do, and I wouldn't be opposed to doing this with the fact that the British pound is the strongest currency right now, still is, you could take put a buy stop in here. And so what you would do is you put your cursor here, and I would left click, go to trading, go a buy stop. It's going to mark a stop, and you can adjust this if it breaks to the top of this candle and go for 5 pips. If it brings in, get you 5 pips, get you in and out. And so I would come over here down to my chart, go to modify, and I'm going to put my price by points in, and I'm going to go for, let's say we'll just say the price right now is at, let's see, we have the entry at 73.43, so we would make this we're in a buy situation, make this, well, let's give it 10 pips and see where that is, make it 73.53. 73.53, and we'll make this one 23. Modify, and there would be if it gets in, here would be our target. It'd be before this moving average. It would be, we have to get through these wicks right now, and this is where we had a little bit of a rejection, right, with these wicks right in here. But if there's enough push up, we're going this for. Now, right now, I've got set for 10 pips. If it gets to the 5 pip area, I'll probably just close it out. If it can just get one straight push on up, it may get me the 10 pips on this one. And that would be that trade. So we'll keep that one in the works here and see what we have. Oh, it's the U.S. We already talked about that one. Your U.S.
We just had a pound Swiss. You might want to have a look at that.
Okay, pound Swiss. So that was the Swiss was one of those pairs that we were looking at. Looks like it's about the same scenario here. Here's the money zone. Here's the money zone. It's we had a bounce arrow go. Now, do we have 20 pips from here? If we have 20 pips, that's 13 pips, 14 pips. If we don't, I'd like 15 pips to the zone at least. Going for a 5 pip and 15 pip stop. I've got 20 pips to the downside. I'd like kind of keeping when you have two levels like this, I like keeping it to at least to the edge of the second level. That would gives me time to get out if I chose to do so. And the Swiss is starting to get strong, or it's not as clear cut as the other one was. Still not in the other trade. This one would be almost an immediate get into if we're going to get into it. We have up arrow. Are we in an uptrend? First order business. Are we in an uptrend? 1, 2, 3 red, 1, 2, 3 green. So it's pretty much even. When the even zones, we're looking for 50 pips in between the zones. We only have 26. It really doesn't fit any of the criteria, so I'm going to pass on that.
Al, we have a request though. Can you check out the euro yen? Leon's asking, do you think it might drop any further? What are your thoughts?
Euro yen. I'll go start with the 15-minute euro yen. Ooh, let's see. We have a bounce arrow go that's on a 15-minute. We have 2 arrows. If you have 2 arrows, what you'll want to do is jump down to a lower time frame. So you're looking for a double time frame analysis on this. My first order of business, I'm going to see is it in an uptrend. I like putting my moving averages on so I can see what they are with all 3 different moving averages. Right now, it did cross over the 200. Tells me it's probably more in an uptrend. I think we determined it was about in the middle. Let's see here. Yeah, I kind of consider it to be kind of in the middle range. It's more of a downtrend, probably actually, but this could be a retracement type of thing. It's still, in fact, it's crossing moving averages. Tells me it could start building some green zones underneath of it. Let's see. Let's see what we have here. So do we have? Again, we had a bounce. Here's an arrow. This would have been contra trend, especially with the fact that we have the moving average right here. That would have been a 62 pips to the target. It isn't a downtrend. So it really wouldn't be even a bag entry because there's more zones. It's more of a downtrend than it is an uptrend. This is more of a, probably a little bit more of a bounce, maybe a retracement. We're getting everything. Moving averages are crossing, but they're consolidating. They're not really all in the right order. You can see the green one came up. It's starting to cross over. So it's finding some consolidation right in this area. I would stay away from this. One, the direction's wrong. The bounce was good. And this is a second arrow, and it would have, it really cuts down on your, still has 27 pips, which still isn't bad. Let's go to a 5-minute chart and see what we have with that. Let me mark the arrow. It's having a pullback.
You're still on a 15-minute.
Yeah, I know. I'm just
Okay.
I'm going to change it here. It's just a second here. 4 red, 2 green. Still in. I kind of like this more of a retracement. Not so much a retracement, but it looks like it's trying to change directions just because it's crossed over the movie. Now, here's my purple one. This one is below the prices right now, so that's good. We have all the moving average are in the correct direction. After this, here is where everything was consolidated. All the moving averages are spread out. Now it's going back to consolidating again. This is a little bit of a push-up, consolidation. You have a zone right now. I'd say it really doesn't bode well for a trade. If it were to break out of, this would be one I'd be more apt to have to do a buy stop on above here to the zone and then just go for 5 pips. But right now you're seeing this is a very significant pullback from where that second arrow was. Now where are we in a 16, 15, 18 pip pullback, coming back to retest this moving average. I kind of like, this could almost be, it'd be a contra trend trade, but if I were to draw a Fibonacci, well, I don't even like the Fibonacci on this lower time frame, but if we were to draw a Fibonacci, this would be the beginning of it. Here would be the top of it. from this move is right now is pulling back 50%. So right now it's right in the middle of this uptrend. Now the question is it going to keep on going down, or is it going to come up and maybe retest the, if we can get this thing to come down, give us a turnaround formation on the candles, and then maybe if you could get in, if say it pulls back into the 50%, maybe you could get 5 pips out of that. That'd be about as good as I would go for having a, if I can get a 15 pip pullback, retest this area, but you're still in a very tight range bound on this. This one doesn't have any real clear direction. Sadly, there's enough to say. Let me go back to the 15-minute chart. Because it's actually, here's the strong down move. This is, and actually, this is sort of a retracement. You take the Fibonacci's and you take it all the way up here and take it all the way down to where it entered the zone. You can see right now you're still right in the middle of this big move. It came down and now it's retesting. This is almost like here's a bounce. Oh, 1, 2, 3. This could be the beginning of a move back up to this area. Strong move up here, pull back. Let's see what we do if we take it from here. This is where it broke out to the upside. This is our pullback, pulling back to the 38 to 50% room. We got above the moving averages. I kind of like this. I like it to the upside with this pullback. Let's see if we put it in here. Now we're pulling back 38% from this area, but it's still kind of range bound. I mean, that's the whole bottom line is it's right kind of stuck in the middle. Strong move down, strong move back up to retest. And it could be sitting in this area like this for all weekend until Monday. Let's say if you're in the trade, I'd say if you're profitable, I'd probably be getting out if it bounces off of this area. If you're long, if you're short, I don't expect this thing to pull back real far, but I also don't expect it to go up real high either. I expect it to sort of stay. I kind of expect this one to. I would anticipate this one staying somewhat range bound. I'd probably say it's going to be range bound somewhere between this area like this, probably for the better part of the day. I could be wrong, but that's the playground that I'm seeing right now. Strong move up. See if it can take this area. We have this little. This was a rally, little bit of a base here, rally coming back to retest this area right in here, which is right where our moving averages are. I kind of like it to the long side more than I do the short side, but I wouldn't go for a lot. We'll keep an eye on that one, see what happens.
What about
looks like our British cat trade triggered. It just triggered up, and so we're in that trade. Now we'll see what it does. This is a lot of the same type of scenario that we had just with that last one with the euro yen. Strong move down, came back up. It's in the 50%, but we have this moving average pointing down here. So, but I do like if these three moving averages can hold, I'll be looking at maybe a bounce off of this one and have this yellow one kind of being the trend marker as it keeps pointing up. We have a little bit of higher high. Here's a low, high, higher low, and it's struggling to get through that. But we have a nice little trend right in through here.
If got breaks, a gap there, Al.
We have a gap down.
Yeah, I've not seen that in a.
No, not necessarily. No, I'm not sure that's a gap down.
No, in the reds. I'm looking at the reds over to your right there.
Oh, yeah. Yeah, you
I haven't
did.
seen that for a while.
16. Yeah, that was yesterday. You know where that may have been? Remember yesterday? Was it yesterday afternoon or that the around 10 o'clock. In fact, it was. Remember
Maybe.
yesterday that the server dropped offline
Oh,
with
right on. Yeah, I bet
that's
you it was.
yeah, I think that's what that was.
Yeah,
I don't know if anybody had Envy yesterday, but their servers went down for a period of time yesterday. And then when they opened up with gaps on. You'll probably see that gap on almost all the charts today.
yeah. Good call. I've got a request for a couple other pairs for your
Okay.
analysis.
All right, hang on just 1 second.
All
I'm going
right.
to take us. No, I'm turning my mic off just for a second here.
Okay.
Okay, I'm back. All right. So what pairs do we want to look at here?
First, the pound yen, please. What are your thoughts on it?
Pound yen, 15-minute charts. Pound yen. Get my template up. Templates. Load. Open. Tweak it up here. Okay, let's see what we have. We have 200 moving averages pointing down. We're below the 200 moving average. I'd be looking at this as being a pullback to retest this. We are having the moving averages are in the right position except for that 200. So it does have a strong little bounce off of this. Here's a bounce arrow go to the zone. From here to the zone, we have basically 20 that would have qualified. Looking at the overnight session, here's our. I wish I could spend more time at the overnight sessions because that's where a lot of the good moves really come from.
Yeah, me too.
And that was really where this whole thing was designed in the beginning with. That's where Arrow was designed with just pretty much the British pairs during that period of time. But unless you live in Europe, if you live on the East Coast and you have to get up early in the morning, it's kind of tough to do that. This doesn't happen until about 1 o'clock in the morning for us. So, but here's the overnight high and low before the money zone comes back in. And remember, the theory is that once it hits the money zone, once the price breaks the top line or the bottom line, you're in the trade. Well, when it broke here, again, from the line here to here, you had 23 pips. But if you waited to get into the trade at this point, you only had 10 pips to your target. A lot would depend on when you would have gotten into that trade. Now, if you were to be on a 5-minute chart, you could have gotten in probably pretty much right about the same spot here. No, you could have gotten in on a 5-minute chart, comes back in, break, up arrow, breaks the zone. You get into the trade on that, and then you would have been nice and easy right up to that 20 pips for your target. Right now, it's just going flat and sideways is all it's doing right now. Coming back and retest that little breakout, and you're in a very tight consolidation. I mean, we're looking at so we have 16 pip. This whole range is only 16 pips. We have a down arrow right into the zone. We had an up arrow right into the zone. So right now it's really basically consolidating in this area. Search, get my shapes, get my little rectangle here. And this is really the playground where it's playing in right now. And it's going sideways, and it's really not giving any clear direction, especially here on the one. But well, if it's real tight on the 5 minutes, it's going to be even tighter on the 15. We do have a little bit of an uptrend. Here's the beginning. Here's where the zone came up, made another zone. Here's your trend line. Now, a lot of times you can just take, if you have two zones together like that, just take the last wick of the first zone to the, no, it's hard to see these wicks when the zone is right over top. There's a little wick right here. And so this is your trend. Here's that down move, came back up. Here's a high, higher low, higher high, higher low. Now we're in a wedge. And you can just start looking at these highs and just start connecting the dots, and that's where your wedge is. And it's we don't know which way it's going to break. Let's see, British yen. Where's the yen on it right now? The yen has just become strong. The British has gotten considerably weaker. If this thing breaks to the downside, if it breaks, comes back up, retests the wedge, then the question, would you have enough room from the break to here? That's 13 pips. That'd be a marginal one. That would be marginal. Looking at the trend line, you do have 200 moving. A lot of times, I kind of like just looking and see where the 200 moving average is. Is it pointing down? Because if it is pointing down and your prices are below, then more than likely you're in the downtrend. The odds are pretty much in your favor that you could just look at that moving average and say, oh, you're in a downtrend because you're below the 200 moving average and it's pointing down. And here it is 1, 2, 3, 1, 2, and may form another zone right in here. We don't know. It looks like, did I just get stopped out or did I make a target on this? I just got stopped out. Yeah, it looks like we just got stopped out on that one. Or did we? What day is it? 23rd, 22nd. Yeah, we just got stopped out on that. Again, this is why I don't like taking trades on Fridays. Everything was looking good for that one, but it didn't work. Let's go back to British yen. Same thing here. It's just consolidating. If it breaks out, you only have a short move before it may get this bounce. Here's a little bit of I would call this to be a trap. Basically, here's the anchor, here's a pivot. This area between the anchor and the pivot would be where I would expect it to come down, test it, and maybe get another bounce again. So that's about all I can say about that one.
So Patrick is saying the US yen could be a money zone breakout.
US yen. US yen. Let's see. US. Let's move over and see what we have here.
Oh.
15 money zone breakout. No, it's already broken. It's well, we already had the money zone break. Here's yesterday's money zone. Here's the bottom of the money zone from yesterday. So it's already broken out of that. So
yeah,
that
in
was.
fairness, he asked this question a while ago.
Oh yes, oh he did. Oh okay.
Yeah,
Yeah, he
he's
was
in
right.
it.
He was right. It is the money zone breakout. We are in a downtrend.
Yeah, he's
Good
in
call on that. Well, at least you saw it. That's good. I didn't. There again, with those types of trades, you almost have to be looking at it, be able to stay on top of these. Now, with probably a good chance we'll get an arrow off of this. Here's a nice little bounce. If we get an arrow on a 15-minute chart, the next zone is nowhere to be found.
Oh wow, look at that.
Yeah. Let's go to a 30-minute.
Steps.
Let's see. Here's the zone. This is the next zone. That's all the way down here. Let's mark that one up and see what we're looking at with that. That's 96 pips. Well, U.S. yen, U.S. is still weak. Yen has just gotten strong. So there's a breakout here. Yeah. Actually, I kind of like this one.
Yeah, that's a good call.
We'll see if we get it. Let's see if we get an arrow on the 5-minute. If we get an arrow, it may be all over on this one. But this one, if it does pull back, there's 30. So you got 40 pips to the other side of the zone. This might be a good one if you're going to go for the bigger run on this. I'd use the 40 pip stop and then go for that other target. Now that's a long way down here. That target doesn't even show up until you get onto an hour chart. That's 100 pips down the road. That's pretty strong consolidate. It was strong consolidation. You can see even over the overnight, it really didn't move a whole lot. This is where Jackie would say that Jackie likes to trade on the swing trades off of the 1 hour chart, and that's here's the breakout, and actually it's making new lows. Here's if you look at the money zones from the previous 3 days, you have this was pretty much where it high. This one was pretty much a basing, got lower, lower. Now we have another lower one. So let's see what it looks like on 1 minute. See if you can find maybe a better entry to where this thing's going to stop and reversal. Just give a little pause. Right now, there's no pause at all. It's just hitting on down there. Yeah, if you got into that trade on that breakout, that was a good call. I'd like to see a little bit of a pullback to maybe pull back to the. Let's get the moving averages up here. See what they're doing. Templates. You see how all the moving when it broke out of the zone. Where was that? It was. Let me get my chart back up again. When it broke out of the previous day's money zone, you can see all the moving averages are nice and tracking down, and they're starting to widen out. The wider they go, the nicer the move's going to be, and then the more likely it's going to. The second one, the yellow one, will more likely hold, especially on the 15-minute time frame. When it retraces, oftentimes it'll retrace in between the blue and the yellow. Oftentimes the yellow will track all the way down. You can see even like over here when this strong move down, you see it never came back and challenged that yellow moving average. Came back, retested in the zone, and then it came back out again. And this could be the same type of scenario. So I would probably like to see it at least a little bit of a pause on here. How much more time? We have 6 more minutes. 5. Let's go to 5-minute chart. We'll pause on that with 1 minute to go. Let me mark my zone before I forget. Here's the money zone. Yesterday's money zone. Here's where the breakout came in. And this move is strong enough to where I'd be almost okay, just take a little buy stop, let it pull back, and then just grab the next move down at 107. Or sell stop, I want to say. Sell stop right there. Now when it comes back through, it'll get me into the trade, and then we're just going to go for the run. See what this thing will do for us before the end of the session here. And I'll have my stop at 10. See, we're selling this. So I'll be going short. Stop will be about 108.06. We'll call it. We'll give it the full 40 pips here. Modify. And stop will be 108.06. And we're going to go with the 107. We're going to go for 66 and tweak it from there. Keep my stop above this red zone, have my target down below. Go for the run. If this were, I would like it a lot better if it were not a Friday. But a lot of times, too, on Fridays, what you'll do is you'll get there's a lot of profit taking, and they'll close out positions. A lot of times, you can get some good moves. You just always don't know exactly what direction they're going to go. Any other questions? Let's see that we have a couple 15-minute ones that came out here. Aussie US. I think we had that one earlier. All right, that one's still. We have that one still, and let's see.
US CAD.
US CAD. Let's take a look at that. I don't think I have that one up yet. US CAD. That'd be a short. That's the first thing I do is size my chart, get my template on. See where my moving averages are. You can see it should be in a downtrend. Let's take a look and see if it is. 2 zones red, 1 zone green. Is it in a downtrend? 15-minute chart. Spread it out a little bit. And you see we have a, here's a bounce arrow go to the upside and is coming back down. It's retesting this zone right in here. Strength-wise, the dollar is weak. The Canadian dollar is also weak, so no real split on that part. It's pretty much going sideways. Look at our money zone break. Here's our money zone right here. And here's the low. If we could possibly get a money zone breakout to the downside, but boy, it's right in the middle of that green zone. That's not good. I don't think they allow the breakout if it's in the zone like this as part of the strategy. But here's the day break. Here's the high. So right now it's still traveling inside this overnight high and low section here. Here's a little bit of a downtrend. Here's a pivot. Here's a pivot. Here's a pivot. Let's draw a trend line off of that. Just start seeing if you can find things that tells a story. You're basically looking for this chart to tell you a story. Look at where the bounces are. Here's so that's a strong move down. Took a long time. A slow, gradual move down from yesterday's. Yesterday's high was pretty much right about in that area, I'm thinking. And now we have comes down in the zone, comes back out, it's coming back to retest. This could actually be like a bank induction move here, where we have came in the zone, leaves, comes in the zone a little bit deeper. So here's your pivot, comes out stronger, hits the trend line. This thing could just keep on going back and forth all the way out through this area. But this could be a bank induction actually, where you have us move down in, but we're in a downtrend, which is part of the problem. I would much rather it been up here to come on down. Again, let's see what the zone looks like here, the range. And you only have 20 pips. You're right in the middle between the range. You have 20 pips. The whole range between the trend lines is 20 pips. You have 10 pips to the downside, 5 to the upside, and no trade there. They're still waiting to be filled. That move on this was interesting. Let's see, that was on the US yen. Let's see where we're at with that. See, the strong move down. Now it's coming to retest. Here's the breakout right on here. It's retesting the money zone. Now, nice little, didn't even pull back 5 pips. That's good. It's a very tight, nice extended range candle. It's a little basing going on right in here. British Swiss, did we look at that one?
I don't think we did.
Yeah, we actually did.
Oh, we're on it.
We're on it here.
Just switched it there. Okay.
Okay, US CAD. We talked about that one.
There
US
was a
yen.
request for the pound New Zealand 5-minute signal, but it disappeared now.
Pound New Zealand.
Pound New Zealand, yeah.
5.
It had a signal, but the signal's gone, so I don't know.
Oh, no, this is a signal right there on
Oh,
the 5-minute. Okay. Well, let's see. Well, let's take a look at the template. Moving averages are going up. We had a bounce off the 200. Actually, I kind of like this one as this could be almost like a Fibonacci retracement, possibly. Let's see how much it pulled back here. Let's see what kind of trend it's in. And right now, I'm looking like it's favoring being in an uptrend. The pound was stronger earlier. And the Fibonacci pound is still relatively strong to the New Zealand. Favor to the upside. I don't like this.
We also have an Aussie yen that just came through on a 15-minute bag entry. Just to keep in your mind.
That's it. Okay, so let me draw a Fibonacci on this one. See where
You've gotten a little bit quiet though, Al.
Is that better?
That's better, yeah.
Okay, yep. Okay. Move up, Fibonacci up, come back down, 50% retracement. It could probably, I kind of favor this thing a little bit to the upside. I'm not sure if there'd be enough room on this one. It'd be kind of tight. Looks like it's trying to change directions. I would expect maybe come up. It may come up a little bit, may come back down, retest down below. I think it's going to probably form a little bit of a wedge. We have a little bit of a trend line coming down. I'd have to see it break this before I would want to get into it. If it can break that and cross over this 23.6 moving average and can maybe go up to the 0, you might be able to get 5 pips out of that. That's 14. I was kind of playing around with this type of formation where it pulls back to the 50, then try and take a buy from the 23 to the 0 line and just go for a nice little scalp off of that, and it could keep on going up. If this is a true Fibonacci retracement, then the target would be all the way up in here. But you have all this red stuff to have to deal with. What was the other one there, Eva, that we were looking at?
It was the Aussie yen.
Aussie yen, thank you.
Bag entry on the 15.
Bounce, arrow, go. Let's see, 15. And it doesn't have the 20 pips. Moving averages, see where they're at. Consolidation, bounced off of the 200. Aussie yen, the yen is still strong. Aussie is relatively weak. It'd be tight right now where it's at right now, but I think if you would have caught it right at that 5-minute candle, it never did retrace at all off of that. To get in now would just be chasing it. Looks like it was a good trade though. Sometimes with these bag entries, you almost have to catch them right at the clock.
Oh, AJ's chart doesn't have a green zone there.
No. Oh, I'm on a 15.
Broker.
Let's see what we have on a 5-minute here.
Oh, there was a bag entry on the 5 as well.
On 5, okay. It's interesting. We thought it was going to I thought it'd be filled on this one by now. This one hasn't even. It just went down and it's going sideways.
Okay, Christopher has just informed us that LCMFX has 27 pips to the next zone. So you're on
LC.
empty, right?
Oh, I'm on MB. Yeah.
Yeah.
So by US yen just got filled. I'll do a sell stop on this one here. Trade. Sell stop. And we're in that one too. Okay, so right now we're in 2 sell stops, and we'll see if this one can go. We're going to go for, let's see, let's go for 5 pips on this or modify it. And we're in at 70.15. There's my target, there's my stop on that one. It could go for a little bit more on this, possibly. But again, I'm trying to just go for 5 or 7 pips a day. If I can take 2 trades, that's my 2% using these parameters. There's 4.7 pips. This one, that's the US yen. Took a little while to break out of that one, but now this is the one we were going for a lot. We're going for a lot more on that one. There's 8. Let's see if there's any other tighter zones here, like on the 1 minute. See if there's anything. There's nothing there. This is the one that had that money zone breakout. There's 7. I'm just going to let it go a little bit more. There's a couple of things I can do. I can just let it follow the moving averages on down. As they get wider, and you get more and more profit. But then once it starts, when it retraces, it'll retrace probably pretty quickly. Right now, it's looking good. And we got in on the Aussie yen and the US. Get these both to the outside of my chart so I can see what I'm doing here. Let's take a look at the Aussie. That one's coming. That's about ready to hit my target. And so we could probably let both of these go a little bit more if we wanted to.
Josh is asking, how do you know the yen strength?
How do I know the yen strength?
Yeah,
I can look at it over here on this nice little tool we have. It says that the yen is strong on all 4 time frames, and the Aussie is, Aussie's giving up a little bit of Aussie's starting to catch up a little bit with the yen. I'm not gonna give that one a lot of room. Let's see, where's the Aussie? This one's struggling a little bit more. But yeah, this chart right here tells me pretty much the strength of all the 8 currency pairs and how strong they are against each other. The one at the top is the strongest, the one at the bottom is the weakest. And I have 4 different time frames. I have a 1 hour, 30-minute, 50-minute time frame, and then a 5-minute time frame, and then it tells me how strong they are with each other on each time frame. It really does help me to gauge in the direction of the trade. Let's see our US yen. So this is why a lot of times I just like going for the 7 pips or 5 pips. By this time I've been out of this trade already. Has a little bit of a pullback. But right now, and that's still okay as long as it keeps on following this yellow moving average. It's going to, remember, they're not going to go straight down. Sometimes they do, but most of the time they're going to breathe a little bit, come on down, give a retracement. Now this is where you can kind of do a Fibonacci, where you have a strong move down like this, came back down. Now you watch where it's pulling back. And this is sometimes if you're already up, maybe 10 pips, you can come back. When it comes back up into this area, you could take another position and double your position size. As it comes back up, I like seeing it come back up to the 38 8% before I would take another position. But it's not unusual for this thing to just come up into the 22, 23, and just keep on going down. So unless it's really getting back up into this area, just kind of let it ride. And then if you get enough profit under your belt, then you can take another position and then on the pullbacks. Now, if it makes a new low, I'll just bring this bottom part of the Fibonacci down and let it come back to see if it comes back to the 38 again. Right now, it's still in a very strong downtrend. We also see how the moving average is in that same zone between the 50 and the 38. It was not surprising to see it come back up and retest that. And we're on a 1 minute chart here, so there's going to be a lot of volatility on this. Once I'm in the trade, I usually like to maybe track it on usually a 5 minute or higher, because the price action will just play with your head as you're looking at that. So right now, as long as the price stays below, if I want to go for that bigger target, I have two choices. I could have taken my 7 pips and be done with it, or if I want to go for the bigger run. Now, being on a Friday, you may want to just kind of cut it loss, but I'm just trying to show you how this thing will maybe track here. So we have a nice moving average down, still pointing down. So this is, and you can really look and see where your new trend line could be. Here's the origin of the move. Get back down and retrace. There's the first anchor. Here's the first hit. Bring it up to bring the trend line to where the first hit was, and then see if it comes back and retest this trend line. And you'll probably find out that this will probably follow along. And as this thing goes down sharper, it's going to keep widening. These moving averages are going to widen out. But right now, this is a valid trend line. As long as it stays below that trend line, you're still good. You can still go for the bigger run if you want. I said the Aussie and yen were kind of neck and neck, so that one's not really developing quite as nicely as the U.S. Yen is. Got me in the trade, came very close to my target. Again, we still have the same situation here. Here's the origin of the move. Bring it on down. Check your Fibonacci. See if it retraces back. It may retrace, this one may retrace back to, it could, as long as it stays below the 61% retracement, I'm still good. I'd rather it at least got my 5 pips in, would have made that 5 pip target. I think it still has lots of room to the downside. Just keep on waiting on that. Patience on this one. British yen, what we got, 15 minute. British yen. Well, that's the one that we had earlier to the downside.
Yeah, Swiss yen. Did you look at the Swiss yen yet?
Swiss yen? No, I don't think I did. Swiss yen. There we go. Let's put our template on. First thing. Down arrow right into a zone. No trade there. We are in a downtrend. We have a 200 moving average is kind of flattening out. We have some confliction with the moving averages. It came back, all the movies came up. Now this crossed over. Now they are all pointing in the right direction. This could possibly, this zone could fail. Let's see what our trends, make sure our trend is in the right direction. Looks like it's in a downtrend. We have this little pesky green zone right here, though. Swiss yen.
You also had a German, you've got a German 15.
German 15?
15 minute.
Oh, German on the 15 minute.
Yeah. On your dashboard, yeah.
There you go, right here. See what that's doing.
Oh.
Ooh, yeah, I kind of like that one.
Yeah, that's not looking bad, is it?
No, it's not. Let's see, templates. Go load that one real quick. Arrow open. Yeah, the money zone breakout right here is the money zone breakout from yesterday. Let's start paying attention to that one a little bit more. Got some momentum to the downside. Where's the euro? Euro is pretty strong. I think that one probably trades against the euro. You have to be careful with this one because this one can really eat your lunch if you have too big a position. 0.05. So and we're going to be going for a target zone. Unless we get this thing on a higher time frame, a lower time frame here, 5 minute. Spread this out a little bit.
Super strong upward on the daily.
I would say with this one, I'd be looking at this zone right around here, or maybe just, let's see, I like to see where the other, trying to find a position where we want to be going with this one. Let's see where 1 minute chart is. There's no zones at all down below here that I'm seeing. See at 30 minutes, see if there's anything down here. This goes all, well, yeah, this was yesterday, this was 2 days. Nice, strong, big move right here. It's going to have a little bit of, once it gets through that, this thing could really just head on down below here. How many dollars of that move is that? That's $72. $72 move on that pair. The fact there's no wicks at all right over here makes me think this thing could just really start to tank. I'm going to kind of split this distance here. See what kind of retracement I'm going to get off of that with the Fibonacci's. That target zone is a little bit bigger than what I would probably want to go for. I mean, it's a nice little zone. It's already past the 61% retracement. So here's the move up. It's already retraced beyond the 61. This could very well go to, I'd probably take it to insert shape. These are our percentage of Fibonacci percentages between 50 and I'm going to use a target of 15,115 on this one. Target 15,115. I think I have too many ones in there. 15,115. Try that. And we'll put a stop in. Just eyeball stop here right around 15,270. 7. We'll see what that does for us. US yen is back. It's back to our 7 again. So let's double check that. And I'm just going to take that one off the table. Say thank you. So we're done with this trade. And the German 30, we'll keep an eye on that. That's where I got the most positions on right now. Keep an eye on the Aussie yen. That one's basing strong, dropped, is basing right now. If it can drop, if it bases through here and drops again, then I would say it would be looking at a extension of all the way down. This thing could go away. I would be okay if it can finish basing here where it actually got me. It got me in right here. Is hanging right around my target zone. Strong move down, basing, and oftentimes the next basing will be 100. Be the range of this thing could very well be. Let's see if I take the ray off of that. This could be the target zone, which has pushed me right at the green line. So just a little bit above that. That's my new target for that one. Anything else? We have Swiss. We did that one. British. Do we do the British yen? Or British Swiss? British yen. That's the one we're at there. German 30, we're on that one still. That one's pulled back a little bit. You have this little zone right here that it kind of penetrated. This zone is working its way through right now. Started over here. Here's a rally, a base. Rally came back, tested it here. Came back, it penetrated it. Now the question is, will it break all the way through and come on back down some more? How are we doing on time? Oh, we still have about 20 minutes.
Yeah.
And let's see, anything else? We've already talked about the German 30. That's what we're looking at right now. I say it doesn't take a lot of pips to get a significant drawdown with this one. I've only got a 0.05 position size. And you can see it doesn't take a lot. It's a pretty expensive pair to trade actually when you really get down to it. I'm not ready to trade that one live yet. I'm still trying to work out the numbers and work out the patterns with it. Let's see. Any other questions, comments?
Leon says US yen is dropping like it's hot.
US yen, that's the one we closed out, though, didn't we?
That's
the one that had a lot of range to it, I believe.
You don't have. Oh, right. Yeah.
Yeah, that's the one I was in it and closed it out already. This is the one that had that money zone breakout earlier. This thing's that's just a hot knife right now. It's a falling knife. Don't try and catch a falling knife. Don't try and pick a bottom on that. Take your profits and be happy with it. So it does have a lot of room to the downside. If we look at expand this thing, and let's go to a higher time frame. I say whenever you can't find a zone, you have to go to a higher time frame and look to the left and see where the price is. And you can see like right now where it's at right now. It is in an up. This is basically showing it's in a strong uptrend. And this was a extended range candle, which is where this is in right now. So now the question is, how deep is it going to go into this area, this candle? If I draw a Fibonacci just in reference to, well, let me see here. If we go from, let's say this zone, it's in an uptrend to here. Now we're on a daily chart. This is where you have to still kind of, it's still worth your while to pay attention to the higher time frames like the daily, because this is really telling you the story about what the overall, keep in mind that the institutions don't trade on 5 and 10-minute charts. They're looking on daily, weekly, maybe. So right now we're looking at, this is right at the 38% retracement of this move. And it's coming in, and so it's crossing some moving averages, but I would not be surprised to see it bounce off of this one, right? As this works its way down to the 50% line, this one's moving its way up to the 50% line. You can almost draw a trend and see where it may fall into place. And then you have another move down. So now you're looking, now you've got your ranges set, but now you're looking, so this is the playground is playing in right now between these two zones. And you can actually draw another Fibonacci in between just these two zones and see where it falls. But I would say it's going to probably find some basing in here. Came up, this whole candle went through this whole two zones. I would expect to see this thing find some range in here. Then you go to a lower time frame, keep the charts in there, and you can just see what it may or may not do. So I can draw another Fibonacci in between these two zones, between this 50 and this 38, and see where this thing will fall. I would not be surprised to see a bounce right off of this zone. There's just another little technique that'll kind of give you another picture to look at. This is not to confuse you, but to just see some of the other alternatives that are out there. When you go from higher time frames to lower time frames, the Fibonacci's fall, they follow a pattern. Mm-hmm.
A question for you, Al, about gold. What time frame? Just what time frame do you generally trade it on yourself?
I don't trade gold. If I do, well, I just don't trade gold. that's really that's a long and short of it. That's a short answer to a big question.
Gold.
Yeah. Now, if I were to, I would say when I'm trading, no matter, I'd pretty much when I'm trading, whatever it is, whether it's the stocks, I generally look at daily charts and see where the bounce points are off of daily charts. I would probably treat the same thing with gold as far as for trading purposes. I would probably do the same thing if I were trading it. I view gold a little bit kind of like a stock. It's I don't get in and out of gold positions. It's just one of those things that I just don't do. I don't know why, but I don't.
And as for silver, I've tried silver, and silver is even worse than gold for volatility. On my demo, I totally annihilated it on silver, so I don't trade silver at all.
When I really, for actual trading, I usually like the Forex. I'm warming up to the indices somewhat, but there again, the volatility gets to be a little bit dicey sometimes. The Forex is just a little bit more predictable, I think. Plus, I have some tools I use that I can use to weigh my odds with the Forex, which I don't have with the indices so much. Well, let's just take a look at these golds here. I do have gold. Here's silver. I'll show those two. They're probably down here at the bottom, I'm guessing. XAU, here we go. Here's chart, window, template. And so usually my idea of trading gold is to give you some, I was, it's funny, I was kind of thinking about this just this morning, is that I trade different things at different time frames. And gold, when you talk about gold, I like gold. I really do. When I say trading gold, I mean, most of my trades, I'm in and out in 20 minutes with the Forex. With gold, I'm usually in and out within about 20 to 40 years, literally speaking. I bought my first ounce of gold back in 1976. I paid $200 an ounce for it, and I still have it. I bought some back in 2008, and I've traded some of that off around 2021. So do the math. We're talking 11 years. Gold is one of those things it's a buy and hold. It's more of a hedge against inflation and government insanity. So that's why but I don't trade it. If I buy it, I usually buy it to hold. Silver would be the same type of scenario. Currencies, that's a whole different ball game. Cryptos, that's another ball game. I'm viewing cryptos a little bit like gold anymore. I just buy it to accumulate it, hang on to it because I think it's going to go up, kind of like gold is. I think cryptos may be the new gold in the future. I think gold will still be around, but I think from a flight to currency annihilation with our governments, I think you're going to be seeing cryptos. It's going to take the stage. That's just my thought. That's just my opinion. And for every opinion, there's another one to oppose it, and that's perfectly fine. But I don't generally trade gold. It's too volatile, and I just don't have a real pattern for it. If I were to be trading gold, I'd probably be more of a swing trader with it, maybe looking at a daily chart, and then use a Fibonacci type of thing off a daily chart. Because like I often say, is that no matter what's trending, it's going sideways on a different time frame. Right now, you can see on this daily chart, it's trending, but it's really trending inside these levels. So I would be apt, if I were to be trading gold, I'd be looking at being a buyer down here and a seller up here, plain and simple. But you could be holding on to it for, well, this is a daily chart. Let's say you bought it down here. You might be hanging on to it for you maybe hold on to it for a month. It's about 25 days to get. If we use the same range from here to the low, you're looking at, it was a 42-day period to go to that range. Well, I'd be looking at probably the same 42-day period to go from here back up here, and but I'd be willing to hang on to it rather than try and catch all this volatility. There would be more of I just buy it and hold it. Maybe look at and this is where the technical analysis that we teach here comes into play with retracements and wedges and trend lines and things like that. Here's the trend, and you're looking you're looking to see where these little spikes, these little wicks line up, and just find out where the third one is. So you find two that kind of line up. Here's a high, a low, lower high, lower low. This is a trend up here. From this wick to this wick, then take it on down. When it breaks out of the trend line, you have an up arrow. I would say right now I'd be looking at buying it right in here. And then you'd be looking for pullbacks. Here's the pullback. Here's your, you're looking at impulse moves. You're looking at, in fact, let me get my other chart up here and maybe I can explain this a little bit better. Let me get a gold chart up on my Fibonacci's. Or on my, here we go. Here's a gold chart. There we go. There's the gold. Take this off. Let me get to my daily chart that I was looking at. Here's the range. Let me take these moving averages off, just to kind of clean this thing up for you. So we're looking at the ranges between, when I first look at this, I see, okay, where's over this daily chart, where's my high, where's my low? Here's my playground right in here. Here's where I could be drawing my Fibonacci lines. And you see it from this up move. Whoops, let me get this thing here. This up move, it came back down, it retraced 61%, and it's bouncing. Here's the little double bottom right here. Now, when you start looking at these moves, you can look at this section right in here. Let me just highlight that. And we're going to make this white here just so I can. Okay, so we're just going to highlight this section right in here. And I want you to look at the waves on this. This is kind of gets into a little bit of Elliott wave theory, where you have a impulse move, retracement, impulse move, retracement, impulse move, retracement. And when you look at, a lot of times these things will go in 5-way increments. So if I have where's my tool here? So here's the first wave, second wave, wave 3, wave 4, wave 5. And then in these waves, you're going to have, in each one of these waves right here, the 0 to 1, 2, 3, 4, 5. Let's just take this 0 to 1. Let me mark this so I don't lose my spot on here. Just a little bit of an Elliott wave theory discussion here. Inside this, if I go to a lower time frame, you'll probably see 5 waves inside each one of this one, and you'll see 3 waves down to this one, 5 waves up, 3 waves down, 5 waves up, 3 waves down, retrace, and then it goes back down again. So let's just take the 0 to 1 to 2 area. And let's go to like a 15-minute chart, if I can do this. Back to my daily chart so I see what time is. That was back in December. Go to December. And here's our waves. Oh, is that where we had it here? That's the wrong one. Where'd that come from? Let's go back to my daily, see where I'm at here. Let's get the exact date here. December 1st, that's what I'm looking for. Okay, so here's our waves here. Let's see if we can do this right. Here was where we said our wave 1 was. Look at the impulse moves here. Impulse move, retracement, impulse, retracement, impulse. And actually probably, this one isn't real clear, but you'll get the idea. You have an impulse, retracement, impulse, retracement, impulse. That's, now you have your 3 waves coming down. There's 1, here's 2, here's 3, comes back, retests, and starts another wave. Actually, probably take it on down to, I say anyway, you're getting the idea here. You should get the idea. Impulse, there, and then comes back down to that. So anyway, you got 5 ways up, 3 ways down, and then it starts. So all these retracements, you usually get 3 ways. But as you go with these different time frames, you can see where it's got waves inside those waves. And that's really what we're looking at from the big picture of these price movements. And so going back to the discussion with the gold, is that right now we're starting to get into an impulse. Here's wave 1, wave 2, wave 3, could have a little pullback. Wave 4 and 5 comes back up, retests the trend line. So, but this is where you look at, and everything's on a micro level as you proceed into this thing. You know, I probably just totally confused the bejeebies out of everybody. But that's just a little lesson on waveology, I guess you could call it. So, but all these, whether you're trading gold or whether you're trading indices or whether you're trading forex, they all have these same patterns in it, and you just start training your eye to see these patterns. But remember that when you see a trending pattern on a higher time frame, it's really going sideways in a larger time frame, and that's the point I'm trying to make here. Then you just find where the pivots are, you find the breakout, but the higher the time frame, the more patience you're going to have to get to its target. As I'm in and out with 5 pips in 20 minutes, but if you're going to be going for these higher time frame, like a daily zone, you're going to be in it for several days or even months. And that's one thing with like with stocks is another example, is that find a stock that you like the direction that is, like, let's say it's in an industry or a sector that has a lot of volatility, and you get in on the pullbacks and you just take the profits on the way up. It goes up, take your profit, wait for a pullback, buy back in, take your profit, buy back in when it pulls back, but know that you're trying to find yourself in that direction that you need to be in. And it's 9 o'clock, so it's about time to wrap this thing up. Any other comments, questions? Hopefully I didn't confuse everybody too much.
Pepper says, nope, makes sense to me. It's the fractal nature of markets.
Yeah, and markets basically, years ago when they first came out with chart analysis, people that were chartists or people that did technical analysis, they were thought to be, they were crazy people, because everything was based on fundamentals. But then they started finding out that as computers came out and they started tracking this stuff, they found out that these fundamentals have actually been trading with a pattern like the patterns have developed. And that's one reason why technical analysis has actually overtaken the fundamentals, because people, now that people have computers, and it becomes, what came first, the chicken or the egg? Did the patterns develop because people started adopting it as patterns, or did it adopt as patterns because that's the way the fundamentals traded it? I don't think anything's really changed over the years, other than the fact of how we look at the markets. And that's why I say that usually the fundamental or the technicals will tell you the story before the fundamentals do. And so by the time you hear what happens on CNN or whatever news station you listen to, or whatever news source you look at for your trading, by the time you hear the announcement, it's already too late. And all they're really doing is they're just sending you a message saying, buy, buy, buy. But really what they're doing is saying, I want to sell to you. So I want to sell high. So I'm going to drive the price up to where I want to sell it, the big boys, and then they're going to drive the price back down. And what are they going to do? They're going to buy it back again. So, and that's the way the game is played. On that note, again, it's Friday. Enjoy your weekend. Be safe. Stay green. And we'll see everybody on Monday.
Yeah, everyone have a great weekend, and we'll see you all next week.
And thanks so much for being here. We appreciate every one of you, and look forward to seeing you back again. Take care.
Ciao, everyone.